Hi, Tim Bigham from the floor of the CME Group, and hoping you'll join me as an options insider as we look to uncover the big and unusual option volume that many times is a precursor to a large and impending move in the underlying shares, some informed knowledge by the big players out there. So speaking of big and unusual volume, we saw that certainly in eBay over the past several days. On Tuesday and Wednesday saw big volume in the November 29 calls that expired tomorrow. So these are very short-term options. Stock was right at 29 at the time. They came in and bought a total of about 32,000 of these options, drove the implied volatility from 25 all the way up to almost 40. I elected to go out to next week's 29 calls, buy those, certainly can hedge by selling this week's 29 calls, capturing about a 9-point implied volatility differential, looking for that stock, to pin around 29 based on that calendar spread. Also saw some big and unusual volume in Tyco earlier in the week. TYC, a name from the past, December 39 calls. Saw about 7,000 trade versus only about 300 open interest. Day after that volume, we saw a JP Morgan upgrading the stock. So who kind of knew there, right? But that's certainly a way to use the option scanners to identify and position along with that kind of big and unusual volume. Otherwise, we're looking at a market, that is kind of having a little trouble, certainly breaking out to all-time highs. We're at the end of earnings season where earnings will be okay. Certainly, revenues weak for the third straight quarter, so we're having a revenue recession. As we've talked about in the past, price to sales on the S&P 500, highest ever, so you just have to acknowledge that you're buying the most expensive market in history from a price to sales standpoint, yet we're looking at interest rates that are at the lowest ever, so it's that really trade-off, which way will kind of win out, and with hints that the Fed may be raising sooner than later now, I think a break below 204 to the downside on the spiders would be the impetus for maybe the end of this rally. We really need to break out to, fresh all-time highs, I think, to get this rally going again. Until then, we're entering kind of a shoulder period here after earnings before, if you will, the holiday season that normally is a little bit less than bullish. So, as always, stay on guard in this market. Keep those position sizes in place and stops going. Until next time, this is Tim Bigham. Here's a good trading. Take care.